Also for the reorganization, is someone gonna nominate a slate? Brett, are you gonna do that?
What is that slate?
Me for president, David for vice president, and Jennifer for secretary.
She's staying in that role? Okay.
I think so.
Yeah, I can. Nice to talk about it prior to doing it.
100% agree. But you don't have
Who's
to.
the treasurer? Somewhere here we have to elect the treasurer.
All right, we are ready.
Yeah, I saw that. School
We are
wellness
officially
advisory.
opening up the school finance. Is the board ready?
Yep, we're ready.
Okay.
Okay, so you might recall every January,
Your mic's not on.
Sounds like it's maybe time for Steve to just
Now
maybe
it's
take
on.
over.
can you hear me? Are you laughing at me, Brett?
No, ma'am.
Not out
Feel it.
loud.
I'm not, smiling.
All right.
Debbie's off to a really
So,
outstanding.
if you recall, your very first meeting last year, the CFO is required to present investment income for the past year and the fiscal indicators report. So I'll start with annual investments, which is fairly easy. You have a report in front of you that shows our interest earned over the last 4 years. This year, we earned $896,252.99. So, pretty lucrative, especially with some of our bigger accounts, with the corporation and the rainy day fund. We've looked at this a few times just to determine if there were a better investment for us to put our money into. We've looked at some short-term CDs and things like that. But each time that we've looked at it, the banks that we're banking with have offered a fixed interest rate that was more lucrative than putting our money into CDs, and for liquidity purposes, it was a better decision to do that. So our current contract with First Merchants Bank, if you recall, we extended that for a year. They honored those interest terms, which are 0.25% below the federal rate. So those are our earnings for 2025. Any questions on that? And those stay in the accounts that they're in. So the cafeteria, 48,000 stays with that federal cafeteria money, and so on.
Any questions, you guys?
I think they're waiting on Jim.
No, I screwed this thing up again.
And before we move on to the next one, we do need to have the board elect the president and a secretary for the Board of Finance.
Any nominations? I think Becky is willing to be president,
Yeah, Becky was willing to be president.
and
You want me to second?
Tina secretary.
Yeah.
Okay, team secretary.
Okay. Do I need to second that motion? Is that what
Second,
we're doing?
yeah.
Okay.
All those in favor?
Aye.
Aye. So moved.
All right, thank
So
you.
Becky and Tina.
Okay. So next, the fiscal indicators report is housed on the DUAB website, and we're going to show you a demo of that. So the Distressed Unit Appeal Board. Several years ago, I think pretty much after there was some financial trouble with a couple of school districts in the state, a group of CFOs came up with these indicators for the public to be able to see and kind of flag when a school district might be going into deficit spending. So this is a good way to kind of hop online and gauge the health of each school district. They go back about 8 years. Steve actually put together a slide deck, kind of condensing this information. We're just looking at the past 5 years for conversation purposes. The drawback with these is that it's always a year behind. So the indicators that we're going to talk about today are for typically from 24 calendar year or 24-25 school year. So keep that in mind. So I've also attached to the agenda a memorandum from the state communicating what these indicators mean and some of the definitions. So in your spare time, you can browse through that document. Or if you have any questions about what a particular indicator means, this is a good reference point for that. So getting into the actual metrics, like I said, Steve put together a summary slide deck on the indicators. Oh, now it's up to me. Okay, so there's 6 indicators that are housed on this website for each district. Enrollment and demographics for each district, fund balances, annual deficit surplus, fund balances as a percentage of expenditures, revenue by type, and then operating referendum revenue for those districts that have referendums. Some of the basic information for 24-25, our ADM count was at 4,821 students. Our net assessed value in 25 was 2.2 billion, and the estimated population within our district is a little over 31,000. And then there is the DUAB website if you'd like to study those indicators after the meeting. So first off, enrollment and demographics. This shows our 5-year enrollment. As you can see, our virtual enrollment has really taken off in the last couple of years. In person, in fall of 2020, we were at 4,929. Right now, we're at 4,814, but we have made up for that in virtual. So if you look at the very bottom line, we were at 4,937 in fall of 2020, and we've returned to 4,935 in the fall of 25. So we lost a few enrollments over COVID and during that time period, but with the virtual school and some enrollment strategies, we've been able to recover. These are the demographics of our students. Our free and reduced lunch continues to increase over time. Special education numbers, I think we're going to talk a little bit about that in the regular board meeting. We've definitely seen an increase in the last 5 years from 17% to 22%. And then our English language learners are growing at a slower pace, but still growing from 1.5% to 2.9%.
Do we know what we can attribute that, 10% and now back to 7.5% increase in the free and reduced lunch since 2020? I mean, started at 40, went up to 50.8 last year, now we're back down to 40.
Some of it is getting parents to fill those out. We've gone back and forth between whether or not we charge for lunches and whether or not we charge for textbooks. And if there's no incentive to not pay, it's hard to get parents to fill those out. So I'm not sure that it's as much an indicator of the actual than it is an indicator of us being able to successfully get parents to fill out the applications.
One other change that took place several years ago was in the federal government side, we are not allowed to audit free and reduced lunch. But if we shift over to free and reduced textbooks, then we are allowed to audit. And so the state made a decision several years ago to make that switch. And so parents are applying for free and reduced lunch, but it's actually free and reduced textbook. And so that's one of the things that you're seeing some of the changes, probably with the state also going to free textbooks for everybody now. Can you see that decline in number? So both of those factors play a part. COVID, as well as how the state has decided to allow us to move
So when
forward.
you say audit, we can get financial verification from
Yes.
those applying for it?
Yep,
Okay.
that is correct.
Okay.
All right, let me catch up. Okay. The next slide shows fund balances for each of the funds that's shown below. Some of those are outdated. We used to have a different chart of accounts with the general fund, capital fund, and bus replacement, but those have gone away, so you kind of see those trend down. And this is the point where, can you go out to the website? If you actually go out to the website and like hover over these graphs, it'll provide the actual numbers. It's hard to demonstrate in a setting like this, because when you go back and forth, you have to make sure that the school name is still Franklin, and it's kind of clunky. So that's why we kind of combined everything into a slideshow. But if you went out on your own, you could view this information, and you can actually download it if you choose to. So this slide shows fund balances at the end of each calendar year. As you can see, our highest bar over there is rainy day funds. In 2024, we were around 6 million. And then this just shows all of the fund balances for each of those main funds. If I go to the next slide, these are the funds that we really monitor. Debt fund, education fund, referendum, operational, and rainy day. And this is what, these are the funds that are part of the board goals and things that we monitor on a daily basis. So any questions there? As you can see, our fund balances have typically gone up or at least remained the same over the last few years. And actually, Steve has summarized the number part into a graph here, which is much easier to talk through. So our debt funds, fund balance there, at one point we were at 3.4 million. Now we're down to about 2.7 million. And you'll see that decline over the next couple of years because as the high school bond drops off, we won't be able to keep much of a fund balance in that fund anyway. Education fund has grown a little bit over time. As you can see, we peaked in 2022 at 4.8 million. We ended 24 at about 4 million. Referendum fund, we've been working on getting that fund balance down. I think we ended this year at 1.2 million, so we're slowly chipping away at that. And then operating funds has consistently been 2.5 to 3.5 million over the last 5 years. And then rainy day was about 5 million, start of COVID. And then we spent quite a bit on some like emergency purchases and things like that. We were down to 4 million. And then as you can see in 2023, we ended up transferring about 1.5 million within 2 years to get that balance back up. And that, coupled with the interest that we've earned over the last few years, has definitely kept that balance healthy. Any questions so far? All right, this slide shows annual deficit surplus. So this is revenue versus expenditures. So if the green bar is higher than the blue bar, then we brought in more than we've spent, and vice versa. So as you can see, in 2023, we did have a deficit of 2.2 million, which just means we spent some of our savings on some of our salary initiatives and adding positions to support students, things like that. But as you could see from the previous slide, we still have healthy fund balances in that respect. And then number 4, fund balance as a percent of expenditures. We've been very consistent on this one. The only year that kind of looks a little wonky is 2021, and that was because we had a GO bond that year, and that was included in those fund balances, which kind of escalated it above normal, per se. But other than that, we've been right around 28.5%, which I believe is, we're gonna end there in 25 as well. So if nothing else, we're consistent, right? All right, and then this graph shows revenue by type. It's just more of an informational graph. As you can see, most of our revenue comes from local tax revenue, which is in the orange, and then state revenue, which is in the blue. And then you have the federal stimulus revenue was ESSER dollars that we received. Federal revenue would be grants, and then other local would be things like Cub Academy, facility rentals, interest, PAC, shared services, things like that. And then the debt revenue that you see up there is from the GO bond activity. So if you go to the next slide, then you can see it that summarized in number format. So probably the thing to focus on is state revenue has gone from 34 million in 2020 to almost 42 million in 2024. So the state has been generous with us and being able to pay our teachers at a higher salary. Our other local revenue has increased by purpose, you know, with some of the PAC and kind of side businesses that we do to earn extra income. And then operating referendum revenue, we were at 4.3 million in 2020, and now we're up to almost 6 million in 2024. And then local tax revenue, 24 million to almost 32 million. That's because of the consistent increases that we've seen in assessed value. This slide shows our operating referendum revenue and the pace that it's increased over time. In 2024, we had a cap on that of 4%, so you're not seeing that income increase as much as the assessed value did in that year because of that cap. But we've consistently increased those revenues since the referendum passed, and that has enabled us to provide some solid salary increases for both teachers and support staff. The next slide shows that in numerical form. So we've gone from 6.7% of our revenue being the referendum fund to 7.1%. All right, and those are all the data points that I'm required to go through on an annual basis. Any questions? Wasn't that fun?
Tina, where is or how is the rainy day fund invested? Where is that, and is it in a money market account somehow?
It's similar to a money market account, yes. First Merchants has worked with us to make that at kind of a fixed interest rate, 0.25% below
So it's
federal.
the same as your?
It is,
Okay,
yep.
all right.
Yep, all of the accounts are treated the same way in that respect.
Okay.
So when you see the financial statement that I'll present a little later, you'll see at the bottom of it our ending cash for the year, and that number represents all of the funds within our accounts at First Merchants. See, I got through it quickly.
That will conclude, yes, and that concludes our financial fiscal indicators session for our finance board.
Thank you, Tina.
Always got some cash available.
And we can close the meeting.
Is it 6 o'clock?
Yep, motion.
Is there a motion to
Yep.
close the financial?